Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Joining us from the land of Schlitz and Pabst Blue Ribbon, Jim Bianco, I believe, is with us right now. Rich, do we have Mr. Bianco? Okay, we do. Thank you, Rich Truman, for that this morning. Jim Bianco is nailed the sticky inflation call. We get an update. Jim, like, good news this morning, futures up 25. We're getting knocked around here in immense emotional volatility. What is the Bianco view on inflation?
That it's still sticky and that you're starting to see signs that even people are starting to become nervous about it. The surveys like Michigan and the Conference Board are showing that people are expecting even higher levels of inflation. The Fed might call that being a bit unanchored. And I think that it's going to, stay with us and be a problem. Now that I've said that, it's a 3%, 3.5% problem. It is not an 8, 10 or Zimbabwe problem. But even still, a 3.5% problem means that interest rates, even though the bond market has rallied down to 4.3, we don't have a whole lot more on the downside to go if we've got that kind of sticky inflation. How
will the Fed adapt to our new, I love this phrase, fiscal space? How does the Fed adapt to, forget about the legislation overnight and the ramifications of X numbers of zillions of dollars of debt added on. Where we are now, how do they adapt to our fiscal policy?
Well, I'll answer the question by saying I hope they adapt, because their attitude right now has been, well, we have to wait and see, and we have to sit on our hands and see what happens with tariffs and see what happens with the budget and then kind of assess it from there. And that's why the market doesn't expect the Fed to move until June at the earliest. At this point. So I think the Fed is going to have to learn to adjust that there is a plan out there by this administration, and it isn't just a bunch of disconnected things like, tariffs or a sovereign wealth fund or demanding that Europe pay for more security so that we could relieve our own defense budget. It's what I've been talking about for the last couple of weeks. It's the Mar-A-Lago plan. That is the plan. And we're getting all the phases of that plan. And the idea is to lower the value of the dollar, is to bring the U.S. into a more competitive position, is to relieve us of the debt burden and bring down interest rates. But right now, the Fed seems to think like there's kind of three random things that are happening side by side and hasn't put that together. Once they do, hopefully they'll understand the plan.
So it's interesting, Jim, Torsten Slok over at Apollo is out with a note this morning and just kind of talking about the reverse of globalization. He calls it segmentation, and talking about how that puts structural upward pressure on inflation, goods, inflation in labor, keeping interest rates structurally higher for longer. How do you think about that? Is that something that could be a real headwind for global economy?
Oh, I think it is a headwind for the global economy, and it will be for both that and inflation. Torsten's right about that. It will put upward pressure on inflation. And if you look at the global economy, especially if you look at the European economy, they're not doing very well right now. The Chinese economy is not doing well at all right now. The bright spot in the globe is the United States. At least at the top line, the United States economy is stronger than most of the other developed countries, and it continues to do well. But that segmentation, or that deglobalization, as it was called before that, that's been underway now pretty much since the financial crisis and got accelerated post-COVID. Yeah. And I suspect we're going to continue to see that happen. That's the impetus behind tariffs and why President Trump keeps talking about we have unfair deals, is that he's trying to correct that. But that means we're going to see more segmentation.
Jim Bianco, we've had a series of conversations. If you're just joining us, James Bianco with us from Chicago. Thrilled he could be with us with Jim Bianco Research. Jim, I look at the last couple days of conversations, and a lot of people are, but we're cautious, and it's the politics and all that. A headline out 3 minutes ago: Elon Musk will attend Trump cabinet meeting today. That according to Fox News. Jim Bianco, how do you participate in the market, in the stock market, given the news flow we're all having right now?
Well, that is the thing you want to definitely get yourself, away from, is getting bogged down into all of these situations, whether, there's this or that that's happening, or even the Mar-A-Lago Accord. I think you'd want to take a longer term perspective and to decide what you like, what you don't like. Now that I've said that, I'll give a note of caution. The other problem that the stock market has, while I think it's having indigestion more than anything else, is we started the year with very high valuations in the market, and the Mag 7 stocks had extremely high valuations. They need everything to go right when you have those kind of valuations. To put it into, in baseball terms, you need to score 8 runs. And if you score 6 runs, that's not enough, even though 6 runs sounds like a lot, because that's the problem when you have high valuation. And that, I think, is why we're starting to see people be more cautious more than anything else, is those type of issues. And it gets kind of wrapped up into, the news flow of the day.
Jim, we're about 90% of the way through the S&P 500 reporting season here. Obviously, Nvidia, big name after the close. What have you learned from the earnings?
Yeah, Nvidia is the biggest name, but the earnings numbers have looked great so far. The year-over-year earnings numbers for the fourth quarter to fourth quarter for the S&P 500 is running around 12 or 13%. That's been a very good number. Even sales, which is kind of analogous to nominal GDP, because they're like trillions of dollars of sales,
Agreed.
is 5.5%. And so these numbers have been looking very good. Now that I've said that, remember that those are the numbers they reported. They don't have much forward guidance, but even the companies are offering guidance that is somewhat positive right now. So that is a good thing, but that is also running into that high valuation thing. So even though those numbers might be good, they might not be good enough.
Jim Bianco, way too early from Jim Bianco. Thank you so much for joining us.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
She's summa cum laude out of New Mexico with all sorts of other attributes at iCapital. The woman who absolutely nailed the bull market. We protect the copyright of our guests. Get Anastasia Amoroso's note from iCapital. You're not going to get it from us. And once again, you mince no words. You just say, this is transitory. Why is the gloom crew wrong?
Well, I think the gloom crew has been looking for an excuse to de-risk, and they've been hanging on to this narrative of a growth scare. But Tom, let's unpack the growth scare and the inflation scare that we had in the last couple of weeks. And the growth scare has been due to soft data or surveys or consumer confidence slumping to, significantly lower levels. But guess what? Consumers have been gloomy for some time. In fact, for the last 2 or 3 years, we've been in this broad range of depressed consumer confidence. But has that actually stopped the U.S. economy? Has that stopped that same consumer from spending? Not really. And then the other thing that the gloom crew has worried about is inflation, and the inflation expectations popping from 5.2% to 6% in the latest consumer confidence survey. Well, maybe it's the price of eggs, maybe it's the fear of tariffs, but we don't have 6% inflation. We're likely to have 2.6% year-over-year core PC inflation reported this Friday. So I think the softness of economic data is an excuse. What's really happening is the technicals, it's the sentiment, it's the retail traders really stepping back. But that is a process, Tom, and that's why I say it's transitory. It doesn't last. It doesn't fundamentally change the outlook. It doesn't last forever. And I actually think we didn't just have a 3% pullback on the S&P. We had a median 13% pullback in a stock in the S&P. So I think we're getting closer to the finish line of this pullback.
Earnings, we're 90% of the way through the earnings cycle here. What have you taken away? What have you learned from some of the guidance that we've heard from corporate America? Yeah,
I think generally speaking, corporate America is still optimistic, but there's certainly some uncertainty and there's some reservations about what's going to happen with tariffs. And, look, if you look at earnings revisions, they have actually been trending lower in the United States, which, by the way, is in contrast to Europe. It's in contrast to Japan. And the reason for that is, we're expecting 13% earnings growth this year, but now we have to shave off a little bit because we have dollar strength. Then we have to maybe shave off a little bit more because we have tariffs and reciprocal tariffs. So, because of that, the sentiment perhaps was not as buoyant as it would have been otherwise, but it does not erase the 13% earnings growth we expect.
Are there sectors that screen well for you right now?
Well, first of all, I actually think you have to stick with what's working right now. And the core theme in the market is actually artificial intelligence. I love the fact that Nvidia...
So you'll be paying attention to Nvidia today?
a little bit.
Okay.
Along with the 60 other analysts that are covering the name. But look, Nvidia gets the last word on what's happening with the momentum in artificial intelligence. And I think what we've heard from others is already pretty constructive. Whether it's Meta, whether it's Amazon, whether it's others, they're continuing to spend on AI CapEx. And, to me, the key takeaway from DeepSeek actually is not that we're not going to need as many chips, but it's the fact that more people can skip the training phase and actually go to the inference phase. And so for that, guess what they're going to need? A whole lot more semiconductor content. So I think you stick with that. And after the pullback that we're nearing some oversold conditions in some of the AI software stocks, specifically AI semiconductors. So I'm looking at that theme still.
If you're joining us right now on your commute across the nation, good morning on Apple CarPlay, Android Auto. Good morning, 92.9 FM in Boston. Thank you for being with us on YouTube. Subscribe to Bloomberg Podcast. This digital experiment growing each and every day. Tracy Alloway and Joe Weisenthal helping out there with Odd Lots. Look for that as well on Bloomberg Podcast. Anastasia Amoroso with us. You bring prodigious mathematics to your research note. You mentioned earlier, let's discuss this. The SPX is down 3%, but when you take out the high flyers, the median, the center tendency is down 13%. So can we say we've had a median correction on our way to a median bear market?
Well, I don't think we're on our way to a median bear market, but we have had a meaningful median correction of 13.5%. And Tom, there's another way I like to look at it, which is in terms of oversold conditions. And the thing that really jumps out at you is the S&P did not quite yet hit the oversold level, neither has the NASDAQ. But if you look at the Mag 7 stocks, they're very close to actually hitting that oversold level, the relative strength indicator of RSI.
Can I translate this for you? You're at New Mexico. You figure you're going to get a solid B. Maybe you'll sneak out with a B+. And in the front row is Anastasia Amoroso, who was 18 years old and had nailed box plot analysis.
I was
like, where did this girl come from?
I was always a front and center kind of student, I will say.
I could just see, did you have you're too young for slide rule. Did you have the HB12C or something?
Yeah, of course.
Of course. And knew how to use it, right?
I did.
Actually knew how to use the calendar. It's like with Lisa here and Anastasia, it's like Nerd Patrol.
I know.
It's great.
I know, exactly. Anastasia, how should we think about valuation? Because a lot of strategists will say, that's all my clients want to talk about is kind of the valuation of the market. How do you kind of frame that for your clients?
I guess I'm a little surprised that's all the clients want to talk about, because we have had the multiple at S&P 21, 22 times. And, there's a reason for why that multiple continues to be persistent. First of all, we have that 2.3% earnings growth, GDP growth. That's not going away. So that's supporting the multiple. The other thing, back to the AI theme and back to the tech theme, if you look at the S&P 500 margin, 12.5% is not bad, but guess what? It is double that in some of the tech shares. And so that's why the margin continues to be elevated. So I don't see that as a huge concern, provided that softness that we see in soft data doesn't actually turn it into a recession. That's not my base case.
Underpin it with GDP. We had earlier Jim Bianco linking in nominal GDP into revenue growth at companies. Do you have the same relationship here where once again, there's gloom on this, and we surprise with okay GDP, which leads to solid revenue growth?
Yeah, I think revenue growth should remain solid. I mean, if you look across the pockets of the U.S. economy, the unemployment rate is low. Wage growth is actually outpacing inflation at this rate. So all of that does support consumption, which drives revenue growth. Now, outside of the U.S., for companies who rely on that revenue growth outside of the U.S., things are looking up too. I mean, Europe, for example, first of all, they've avoided the Mag 7 exposure and the meltdown. But there's something fundamentally different about the European economy, which is they're actually cutting interest rates. And they've been doing that ahead of the Fed. And I think that cumulative benefit of rate cuts will start to accumulate for Europe. It should turn around the housing market. It should turn around the commercial property market. So if you have European exposure in your revenues, that's looking up as well.
So are you saying go global, and with that, do you get finally a weaker dollar call?
No, I don't think so, because the interest rate differential is really the most important thing that I think will be driving the dollar, and tariffs is in the second place to that. Look, the way I look at international, oftentimes it ends up being a trade, and I think Europe is a good trade right now, given the deal that we're seeing with Ukraine and Russia. Hopefully, given the ECB moves, but longer term, to really invest in Europe or Japan or any other places, what I would focus on, Tom, is what are the leading companies in Europe that are tied to artificial intelligence, that are tied to decarbonization?
Can you give us a name?
I can't.
You can't.
I can't. But
Lisa, would you like to give us a name?
No, but I'll give you one other idea. And of course, the markets have already reacted to that. But clearly, Europe does have to beef up the defense spending as a result of the negotiations. And so European defense stocks have woken up and are doing quite well as a result of that as well.
So what are the headwinds here? A lot of folks will say the noise coming out of Washington, D.C. is so broad and so consistent that it's hard to really look through it and maybe focus on fundamentals. What do you say to people like that are saying, I'm just not sure how to play the discussion about tariffs and all the other economic policies that are coming out of Washington?
Look, first of all, this is exactly in line with the expectation that we had going into the year. The name of the outlook, as we titled it, it was the year of solid underpinnings, which are all the economic fundamentals that we talked about, but with plenty of wild cards. And I call it wild cards because they're exactly that. They can turn out to be positive. They can turn out to be negative. We don't know. But what you have to focus on is what is the trajectory of the economy? What is the trajectory of revenues and earnings that you talked about, and position yourself around that. Now, from the asset allocation perspective, I don't know if it's the time to go all in on small caps given the uncertainty, but I think it is the time to go all in on higher quality domestic companies that align with the America First agenda. I think it is time to continue with the AI trend. And the other thing I would say, private credit, for example, stands out as a great opportunity in this environment.
When you came to America, did you speak English?
I did.
You did? Okay.
It wasn't, it was all right.
It was all right. Okay. Like my English. Okay. It was that
not
bad.
Quite that good.
I want you to talk to Americans that have never left the country about American exceptionalism. You and I talked 2 days after Putin invaded Ukraine, whatever. Let's forget about the politics right now. It's not fair to you. But I want you to talk about this phrase, American exceptionalism. Talk to Americans this morning across this nation. What does it mean to you?
It is an exceptional and outstanding place that nowhere else can you replicate that. And I do travel globally. I immigrated to the U.S. when I was 16, but nowhere else can you get the same stability of government, believe it or not, as you get in the United States. Nowhere else can you get this pro-business mentality, even though we argue about the deregulation here and there. And nowhere else, frankly, can you get the same opportunity set as you do here. So it is truly, truly an exceptional place. And this is why when I think about investing, yes, while it's tempting to go invest in emerging markets or maybe trade around in Europe and Japan, if you're a long-term investor, you have to focus on the pillars that are going to be there. And I think the pillars of American exceptionalism will be here.
Anastasia, thank you so much. Anastasia Amoroso, iCap, with us this morning here. She continues, it's transitory, these challenges we have, and she says, get on board in your own way. Look for her research at iCapital.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Ivan Feinseth joins us right now, just absolutely fabulous in securities analysis. How do you, with Graham Dodd and Cottle, Ivan, which both you and I have read cover to cover, model out revenue growth of 70%? I mean, with Nvidia, you're not using any conventional template, are you?
No, you really got to look at their return on capital, which is incredibly strong because they are an intellectual capital rather than a financial capital intensive company. And the growth is phenomenal. The return on capital is phenomenal. They have bought back so much stock that they've pretty much given back all of their equity capital, and they still just continue to grow in value because they continue to innovate, and they are on the cutting edge of AI, which is, we are in a major multi-decade investment cycle here that is going to change everything. And I continue to quote Tom Siebel, who I believe is the one who said that every company, he's the founder of C3 AI, that every company will be an AI company, that every company will use AI in various aspects to optimize their business, to improve productivity, to improve customer interaction. So, and we are just in the beginning stages of this.
Okay. On the WACC screen, folks, which is my favorite value add from Mr. Bloomberg and Mr. Secunda, the debt cost is 0.3% is the weight of debt, 99.7% equity. The ROIC is 114% per year. This is through a Stern Stewart net operating profit study as well. Ivan, what's your x-axis on this? If we all learned in school that it's a 7-year dividend discount model, whatever, what's your x-axis on an Nvidia? How far out can you look?
Well, I mean, you don't have to, you can't just really extrapolate into perpetuity, but they continue, they drive, they've invented the GPU, the graphic processing unit, which is driving all of AI, because what it does, originally the GPU turned digital information into visual information that we saw on the screen. And then they reverse that and they take visual information and turn it into digital information, which is how the large language learning models work. And this will continue to happen faster and faster with higher resolution and more depth, and create these visual pictures that are driving the computer learning process, and also continuing to digest and process more and more information and more data.
Paul, I've never seen this. The CapEx is $3 billion.
Yep.
Cash from operations is $59 billion. 3 divided by 59. I've never seen that.
Yeah. Just extraordinary income statement. So, Ivan, I'm sure your clients are asking you, okay, how else do I play this? I can't have all my eggs in this Nvidia basket. If I believe in this AI thing, how else do I play it?
Well, I'm glad you asked that, because 2 other stocks I happen to like that I think are under the radar AI plays, data center plays, are LandBridge and Texas Pacific Land. They own property and infrastructure that can provide power and water, which is the 3 things that are needed for a data center. You need space, you need power, and you need water and connectivity. So I think both LandBridge and Texas Pacific Land are really incredible long-term data center and AI plays.
Ivan, you got to come on once every 10 days. Paul, you hear the name TPL, Texas Pacific Land Corporation. Does it sound like a timeshare selling you Corpus Christi or Galveston condos?
But look at this. I've never heard of this company before, but the name actually tells you what they do. Texas Pacific Land Corporation owns tracts of land in Texas. Get this, previously the property of the Texas and Pacific Railway Company. So you're literally, Ivan, telling me I got to own the land on which this stuff's going to be built, right?
Yes, and first of all, every other day you hear about new investments in data centers. First of all, Microsoft kicked it off this year with increasing their data center and AI capex from 50 billion to 80 billion. Then Meta came out with projecting 60 to 65 billion in capital investments in AI and data centers this year. Google, 75 billion. Amazon, 100 billion. And then you saw the launch of Project Stargate, which is starting off with 100 billion and planning on 500 billion over the next 4 years. And then Apple said yesterday or Monday that they are investing 500 billion in the next 5 in the U.S. between manufacturing, processor development, and AI and data centers. So you're looking at trillions of dollars in capital investments over the next 10 years.
This is Tyler Glover. They got 111 employees. 111. Ivan Feinseth, brilliant on TPL. Ready? 37% per year over the last 10 years. And it's not just about the AI moonshot that we've seen the last 2 years.
Exactly. Ivan, what are some of the other themes that you talk to your clients about here? Because again, if you think about the equity market performance, 2023, 2024, more than 20% gains in the S&P 500. A lot of folks are saying, man, is this market out over its skis? How do you kind of frame opportunities in 25?
Well, we are still in we're in the golden age of equities. The equity market is the place to be. More and more people are investing in stocks, and that will continue. And that's the look, you look over time, the best way to create wealth has been in the stock market, whether you go past 10 years, 20 years, 100 years, 200 years, stocks have been the best place. Outperformed pretty much over the long term every other asset class.
So are there sectors, is it a technology weighted outlook there, Ivan? Because that has been one of the areas that have worked so well for investors for a couple of decades now, one could argue.
Since the beginning of time, technology has moved society forward and will continue to do so. The internet, the cell phone, the tablet, the personal computer, high-speed networks, and now AI. That these trends continue to emerge, and then they continue to grow, and they drive everything in society forward.
For Global Wall Street this morning, what a treat. Ivan Feinseth with us, Senior Partner, Chief Investment Officer, Tigress Financial Partners, always with a different view. Out of Boston University, which is a good and beautiful thing, probably studied with Zvi Bodhi a few years ago. We welcome you on your morning commute across the nation. On YouTube, our new digital product, YouTube, the YouTube podcast growing each and every day. Really humbled by the international growth there, but also domestically in your office at home. Please, more of Ivan Feinseth right now. Ivan, you were at BU, I assume as Zvi Bodhi in corporate finance. Do the finance textbooks work right now, given the skew to Mag 7?
Well, you know what they say, it's a new economy, but the same old economics still apply. So the same math, the same calculations, while we can do it better and faster using computers and using AI, we can write reports quicker and get more information faster and disseminate it faster. So the way things happen still goes back to the beginning and hasn't changed. Right. The speed at which things happen will continue to accelerate and accelerate and accelerate.
I mean, I got green on the screen, Ivan, but the fact is I got belief in strong buy, MasterCard, Facebook. I call it Facebook Meta. Ivan, forgive me. I call it Facebook. Strong buy Apple. Discuss Apple right now. How do you have a strong buy given the China gloom? How do you do that, Ivan?
Well, first of all, they had a pullback in iPhone sales in China, but they are working on now. They are seeing now a pickup in iPhone sales. iPhone sales and the halo effect that it has to the Apple ecosystem, which drives services sales, will continue to grow. And Apple Intelligence will be also a powerful growth driver for Apple and for Apple services. The Apple has, I think, over 2 billion in an installed user base that, goes through the upgrade cycle, goes through the additional services cycle. And what's fascinating is that Tim Cook said years ago that Apple, as great as the iPhone is and the iPad and all of the Apple products are, Tim Cook said several years ago that Apple's biggest contribution to society will be in healthcare. And they have the fitness app, a lot of healthcare data in their apps and their products. They are just launched new earphones with a heart rate monitor. So there's a lot to do in healthcare and health monitoring and health optimization that I will believe you will see from Apple, which is a whole new category, of growth and the ability to, and then it goes back to AI, which the ability to detect and cure disease, AI to speed up drug discovery. Companies like Illumina, which use AI, use Nvidia's GPUs to map genomes, and the ability for DNA analysis, and to do things to do tests that used to take weeks now can take a day. So AI and technology drives every aspect forward.
Ivan, how do you get comfortable with, if you do, the China risk for Apple? For a lot of folks, it's just hard to get their arms around it in this global geopolitics.
Well, it's always going to be a risk somewhere, but geopolitical risk exists, and they do get a lot of headlines. But if you look, they haven't really affected the market. Since the start of the Ukrainian-Russian war, the market really wasn't affected. Even the tragic situation in Israel didn't affect the market. So they exist, and they have to be geopolitical issues and risks exist, and they have to be taken into consideration. But like I say, no matter what happens in the world, when Tim Cook gets up every morning, the first thing he thinks about is how to sell more iPhones. I say, Mary Barra at GM, when she gets up every morning, the first thing she thinks about is how to sell more cars. And you saw today, GM just announced a 25% dividend increase and an additional $6 billion share repurchase authorization. That comes from confidence in your business, confidence in your business outlook, confidence in your cash flow, and that they will be able to, manage tariff issues, which do affect the auto industry a lot.
Right. I've got to leave it there. Thank you so much for coming on, particularly wisdom on Nvidia and his strong buy, I should point out, on Generous Motors as well. Ivan Feinseth with Tigress this morning.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
The daily look at the front page is the Lisa Mateo report without any discussion of Nvidia. What do you got, Lisa?
Okay, so this is a new report about the highest rated celebrity-owned restaurants. Paul, you're going to appreciate this. Look, TripAdvisor, Google, looked at those 5-star reviews. John Bon Jovi's JBJ Soul Kitchen.
Wow.
Yeah, Red Bank, New Jersey. It also has four locations. So Red Bank, Toms River, 2 on college campuses, Rutgers and New Jersey City University. Cool. But the reason they like it, it's a nonprofit. Opened in 2011 with his wife. No prices on the menu. They just suggest like a donation. So it's created to help those with food insecurity. So they're saying great food, great service, commitment to the community. It's a win-win.
Very
good.
So it's a community restaurant.
It's a community
Very cool.
restaurant.
Red Bank is a nice foodie town, by the way.
Can you figure out a road trip there? I mean, this is like a no-brainer.
We go there all the time. Love Red Bank.
We have to. But you got to check it out. I've heard about it, and I have to check it out.
They said 198,212 meals have been served.
Yeah.
43% paid with donations.
It's incredible. Even people who can't afford, they can eat there, and then if they want to work and like do something, they kind of do things like that
Very
too.
cool.
So it's really, really, really good concept. I love it.
Very good.
Next.
Okay,
Jersey
so
Strong.
this one, Jersey Strong, exactly. This one from the Washington Post caught my eye. More Canadian coffee shops are changing the name of a popular drink on their menu. So the Americano is now the Canadiano. Okay, it's all protesting Trump's tariffs. They expect it to take effect next month. Also, shop owners are saying they don't want to become like this political place, but they want to stand up for their country. So that's why they're doing this. I didn't realize, because some people are protesting, they're saying, well, you're changing the origin because it actually originated U.S. soldiers in Italy during World War II. They complained that the espresso was too strong.
So they put milk
So they
in
put
it?
water.
Water
Yes.
in it. Okay.
Sure, cut it with water.
They cut it with water. And so it became Cafe Americano, which is my favorite drink in the
And now we
country.
need an $800 coffee machine to do it.
Yes. But it was just stand out because you've heard like the hockey fans, right, booing at the national anthem at games. So this is just kind of another thing.
When's it based on the
mix.
president's comments in the last 12 hours on trade?
Yeah.
When's it go away? I don't see it drifting away.
We shall see. It's supposed to
Remember the
start taking
whole
effect.
French fry thing became, what was it, Patriot
Oh,
fry?
Patriot fries.
or
Yes,
something back in the day.
that's right. It's along the same thing.
Oh, boy.
Along the same
All
thing.
right.
Next.
We've been talking a lot about weight loss drugs, right? Curbing your appetite.
We have.
Yes, we have. And you know that. But it's also posing a risk to curbing sales at top companies. You heard Cheesecake Factory, Keurig Dr. Pepper. They all said that it's going to change the consumer behavior. And this is something we've been talking about. Even Molson Coors said it because it says it's changing people's drinking behavior. What's different is that these companies didn't actually mention that on last year's report. So they're mentioning it on this year's report to show, hey, the significance.
Still a deal.
It's still a deal. I mean, Walmart said it about 2 years ago that it's going to affect how people buy food. But yeah, this is the thing.
They work.
Companies are starting to do it.
They work.
Lisa
They
Mateo,
definitely do.
the newspapers this morning. Thank you so much.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.